Hi, it's Raoul. Guess what? I can't believe, but we're turning 10 at Real Vision this September. I can't believe it's a whole decade of democratizing the very best financial intelligence and building this kind of super community of finance, including the super platform of finance. And to celebrate, we're throwing a virtual party on September 27th at 12 p.m. and you are on the guest list. It's free to join, so don't miss out. If you're not a member, you can sign up at realvision.com/free. We've also got a trade ideas competition where you can flex your market smarts, plus some exclusive limited birthday merch and much more planned for September. It's going to be a lot of fun. So sign up realvision.com/free and we'll see you at the party September 27th at 12 p.m. That's realvision.com/free. Hi, I'm Raoul Pal, and welcome to my show, The Journeyman. And The Journeyman is all about that exploration at the nexus of macro, crypto, and the exponential age of technology. I strongly believe in a multi-chain world. People get confused. They hear me talking about one token versus another. You know, I like Solana and I'm very strong on Sui because I'm on the board, stuff like that. And people mistake the fact that that's what I think the future of crypto is. I'm not. I'm a mercenary for price action as well. I'm trying to make money like all of us are. You know, we need to make money out of the space because this is one of the biggest opportunities we've ever been given. As we go from a $2 trillion asset class to a $100 trillion asset class. But I'm actually more broadly interested in the overall space, in a multi-chain world, where people are pushing boundaries and frontiers of using this technology as the new infrastructure layer of the internet. You see, the ownership of goods, whether it's real world assets or digital assets, requires blockchain technology. It's a prerequisite for where the internet is going. Also, the powers of decentralization as society starts rebelling against concentration of power. We're looking towards decentralization, and that's a classic thing that happens in societies over time. It's an ongoing process from one to the other. What is really interesting within blockchain is where we see new use cases coming. There's often a criticism of the space, which is it's bad UX, it's bad UI, there's no real use cases outside of stablecoins and other stuff. But it takes time to get people to start building on this. And I'm not talking about small startups for crypto natives. I'm talking about the big Web2 companies. I'm talking about the finance, and I'm talking about gaming, and culture. These big things, they are coming to blockchain. And I think it's really important to explore this. Now, I'm not much of a gamer myself. I didn't really grow up with gaming culture, but my go-to person for that is Pierce Kicks, who many of you know, who helped us understand what the metaverse is going to be all about. I was with Pierce in Portugal recently, chatting with him over a beer, and he said, listen, there's a huge game coming called Off the Grid that may be the big breakout. And I'm like, okay. And he said, look, this is the strongest conviction I've ever had. And I said, well, what chain's it on? Because, you want to know who's doing this. And he said, Avalanche. I'm like, okay, well, I'm going to get my friend John Woo to come and talk to us about it. Because, John is somebody I really, really respect and like in the space. He's always got something intelligent to say. He helps me broaden my perspectives, and they're doing great work over at Avalanche. So that got me to talk to John Woo. And then I was on the platform recently. I'm going to share this with you because we've got these great trade ideas on the Real Vision platform. And one of our members put up a trade idea for Avalanche. So I thought, okay, that's interesting. Now he's up 7% so far. Who's the member? Can't see the name of who it is right now. But it was submitted for the trade idea competition we've got running on Real Vision, where members all around the world are competing by putting up trade ideas. Now, he's talking about Avalanche's 2024 upgrade and how big that is. So I think it's a great idea to take this trade idea, to take what Piers told me, and then to go and speak to John and find out, okay, what is going on here? So this is why I love Real Vision. There's so many points of connection and interest that we all make, whether it's from the trade ideas or whether it's the notes that members are giving where they're writing up their thesis on things. And you get to drop by and see this as part of your membership. Or connecting with members is another great way. So you can connect via the comments section on that trade idea and chat to other members about Avalanche and the opportunities that arise. And just having people within our network, like Pierce Kicks, keep us up to date. And that's why I wanted to get you guys up to date on what's happening with Avalanche and what's happening in the broader crypto space by talking to John Wu. And John should help us really understand what's going on. So I hope you enjoy it.
Join me, Raoul Pal, as I go on a journey of discovery through the macro, crypto, and exponential age landscapes. In the Journeyman, I talk to the smartest people in the world so we can all become smarter together.
John Wu, how the devil are you?
Raoul, I'm great, and I love being here with you. I'm glad we can make this work. I've been on a couple of times. It's been a while, so this is great that we're back on.
Yeah, exactly. I'm always looking forward to this because, your perspective, because like me, you've got a financial market background, hedge fund background, but also deeply crypto native, technology native. So it's always a good conversation. So for those of you who don't know you and your background, just give us the quick bio.
So similar to you, I started my career in traditional hedge funds and VC. I was a tech investor. You were a macro investor. Similar to you, I also started my own fund ultimately, like you did. And then I got into this space, and so did you. Now, I got into the space, though, first as an investor in Bitcoin in the, call it 2014 era. Basically, I just did the math and realized the incremental supply of the minted new tokens on Bitcoin was on a regular schedule and fixed. And I was counting addresses on the demand side and made assumptions as to what could be in these addresses. And the most weakest assumptions, it was far outstripping the demand. So outstripping the supply. Incremental demand was 4 or 5x that of supply. You have to own it. But I still wasn't 100% all in. It was really 2017-ish, ETH, the ICO boom. And you remember that, Raoul. And I looked at that and I realized, whoa, this is a utility. There's a real use case. I had seen my share of IPOs. I know how expensive they were for Goldman Sachs to take you around as a hedge fund guy there. And I know what it cost the companies. And suddenly you're seeing this done in a global crowdfunding manner in a very quick way for companies to raise money. And the best part was individuals, regular people were getting it early as opposed to late. So that's when I really became all in as an operator. I wanted to create a security token market of private securities and alternatives to make it easier for every person to get access. Back then, that was Airbnb, Uber, and private funds. And then in 2000, so that was CEO of Digital Assets Group, a private security platform. Then in 2019 and early 2020, I did my undergrad at Cornell, a very well-known professor in the space and distributed systems at the computer science department at Cornell, asked me to come lead the business efforts for Avalanche, the team behind Avalanche. And the rest is kind of history. So we were 10 people in a room in early 2020. Today, we're 250 plus all over the world. At least according to Coin Market Cap or Coinbase's rankings, we're one of the top ones, a layer one. And things have been just fantastic. And I think the space and Avalanche have a lot of upside going forward.
So we'll come on to Avalanche and Avalabs in a bit, but let's just talk about the market and the backdrop. How are you seeing things right now? What are you getting for your sense on the ground with your, technology perspective, your investor perspective? How are you seeing the state of the world?
So I am now an operator, not a hedge fund person anymore, but that would be the question I would ask if I were still a hedge fund. In fact, I would be trying to find people like me all day long to ask them about the fundamental operating trends. So you still have your instincts with you, Raoul. So I think if you take this you have to look at the 1 year plus trend. If you look at it from about a year ago to where we are today, today is the day, just so people know, that Fed may cut rates. I think the macro backdrop is actually fantastic, and no one's better at talking about that than you, so I'll leave it to you to talk about that. The liquidity situation, as you talked about, is also improving. I'll talk about the fundamentals of individual assets in the space. I think in general, what we're seeing is a little bit of dispersion now. Not everything is all treated as the same anymore with just different betas. Now, the market is actually a little discerning and trying to figure out and giving the quality assets more respect. And that is based on fundamental trends. And I can tell you from where I sit, there's been a lot of potential partnerships, crossover from traditional Web 2 as well as TradFi, who want to use the blockchain to enable some application, to enable some sort of feature, or to have a better backbone for their B2B infrastructure. And that is all happening. On the native side, the P4P and in the crypto native side, I think things have been, frankly, a little bit quieter. I think the adoption curve for natives has gotten to a point where we really need to see more people crossing over and taking the belief and diving in, like you and I did way back when. And that's only going to happen when you see better applications and real use cases.
So you think that we're at the point where it's difficult to onboard the kind of investor type who's curious, and really the next phase has to be this applications layer that we've all been talking about, working on and thinking about?
That's correct. I think this is now a few cycles. I've been involved now for 3 cycles. You've been involved for at least 3 cycles. And it's grown. I mean, I know you regularly talk about there's 500 million users in this space. I'll differ a little bit. I think there are 500 million investors and speculators, actual developers, and actual users of on-chain stuff is actually relatively small. So there's still a long way in terms of penetration for actual usage. And that's what I'm talking about. What I am seeing is developers, both in crypto native and in Web 2, are experimenting and ready to launch things, but there's a short-term and a medium-term issue. I think in the short term, frankly, they want some certainty in the regulation. And after November, for better or for worse, I think people are going to start moving. It's kind of like the gun just went off and you're at the starting line. Whether it's good weather or bad weather, you're going to start running. So, but while you're still waiting, no, you don't need to figure out if you need to put on a pair of sweatpants or not. You can at least hold off a little bit. There's no like urgency to go do something since we're so close to November. So I think that's one thing. And another thing is, frankly, I think these new entrees into the space, unlike in the past where they would buy it on Coinbase and then somehow easily figure out a way to get into ecosystems and try things out. If you own an ETF, you're actually parking it somewhere, and you're not really getting what this whole space is about, which is utility and usage. So there are probably more people involved, but they're not involved the way an operator would love it to be involved, frankly.
Now, you've seen this kind of development in the past, and that's why your perspective is always useful, because technology almost always scales the same way, right? We're seeing it with AI now as well, that yes, there's the pioneers, the people who experiment and try stuff, but there's actually quite a long time before the applications layer got built. So give us your perspective on that, because I think it's really important, because this is just a technology adoption curve. People forget that. It's just one that's investable by everybody, which makes it different.
That's right. And I think you've also highlighted these good points. Is, forget about the asset class. Look at internet. Like if you just look at the stocks, the Magnificent Seven, you've kind of missed the big picture of how it's changed people's lives. Period. Full stop. It's so obvious now in hindsight. That's going to happen in AI, and that's kind of happening in blockchain as well. What you've seen, frankly, is adoption and usage more on the B2B side than the B2B2C or B2C side. So the average user hasn't gotten their AI ChatGPT moment necessarily yet, unless you want to deal with the clunky stuff on chain. So what I'm seeing in terms of working with developers and partners, I think there are, again, I already talked about one thing, which is a little bit more clarity going forward in the environment, in regulation, but also a lot of blockchain engineers are very good at creating platforms, but they're not great at creating UI, UX. So that's going to need to happen. And we are in the stage right now where developers, if they're going to come into this space, they're going to need better tools. They're going to need scalable blockchains. That's kind of why I'm very excited about what Avalanche is doing in the AVAX 9000. We can talk about that later. Part of it is creating the tools so developers can create new, better creative applications that will create the demand from the usage side.
When you look at demand, again, not just from Avalanche, as I said, we'll get into that in more detail, but just overall, where are you seeing movement? We hear a lot about gaming, we hear a lot about real world assets, but it's still kind of, very behind closed doors, tokenizing US treasuries. I mean, it's not the biggest deal in the world yet. Where are the Web 2 company? What is the state of the union when it comes to the bigger players building on this?
I'm so glad you're asking that because, we're an open source platform. So we see who's developing, and some of them are private chains so that others can't see, but we get to see.
Yeah.
And frankly, there are a couple of verticals that are really growing, and one is gaming on Avalanche.
Yeah, you guys have done a good job with that so far. You got that. What was the huge game you've just got? That's just launched?
There's a couple, but Gonzilla.
Off the grid.
Off the grid. Yes,
Yeah.
off the grid. Okay, so we'll take a side tangent and talk about off the grid.
Yeah, I want to hear about this.
Because AAA publisher type people.
One of my favorite people in the entire space is a guy called Piers Kicks at Delphi. And I was with Piers at his house in Portugal, and he was like wild-eyed. He goes, "This is the biggest thing I've ever seen." So I said, "All right, I need to get John on to talk about this." So talk us through this.
It's legit. It's going to be on the PlayStation. It's going to be on the Xbox. And the in-game asset solution will be on a wallet and minted on Avalanche. So the users can have sovereignty of their assets, ultimately be able to trade it, and feel like they can do things a lot easier and have the back-end benefits. But what's really exciting here is this is not your classic crypto game, which is basically thinly veiled DeFi product. This is actually great gameplay, great graphics. This is what Gonzilla people are known for. And they raised like $75 million plus in order to create this game. So it's not a cheap game. And they have a history of a large following, great graphics, and they're going to be launching this in the very near future so that all their users can have an even better experience than they have traditionally. So super excited about it. I can't wait till everyone is able to see this in about a month or so. And it's going to be minting those assets on the Avalanche blockchain.
Yeah, I mean, Piers said, he's a gamer, a true gamer. He grew up gaming, and he's like, this is a really good game. Forget the fact that it's on chain. It's a really, really good game. And, nobody yet has got gaming right. Now, the lead times are long, right? It takes a long time from the idea to doing it. But this feels like this one has a chance of actually showing people how this is going to work.
That's correct. There are other good ones as well, but I think gaming is where you can get a lot of users. They're very similar in age and other characteristics as crypto native people. So I can easily see someone doing gaming in Gonzilla's off the grid and then figure out how they get off of that into the greater ecosystem of Avalanche. Avalanche is also Ethereum EVM compatible, so they can move all over the interoperability to other chains as well. In fact, there's even a move VM on Avalanche. So if they go to other places like Sui or something, that can all happen. I think that's the ultimate dream for anyone in this space, is to create that true interoperability so that people can move anywhere they want. That's the real power of, the blockchain, the permissionless open blockchain.
Yeah, because in the end, we can't have walled gardens. Everybody's going to have to work with each other to allow some sort of interoperability. Because if the internet didn't have interoperability, you and I wouldn't be able to talk right now. I'd have to have the same software system as you, the same, ISP, all sorts of things. But, this bit needs to get done, and it's still not done very well yet, this kind of interoperability layer.
Correct. I think what you need, again, is good tech at the blockchain level, but you need, in at least gaming, you need great content or great AAA publishers at the application level. And you combine those two. Frankly, I think Gonzilla and some of these other games chose the Avalanche network of networks because they wanted their own execution environment. When you roll up a L1, or what we used to call a subnet, it is your own self-sovereign blockchain. You choose gas, you choose the token economics, you choose what you want to validate, how many validators, and most importantly, it is customizable so that, and it's your, call it sandbox. So you're not subject to congestion based on some surge somewhere else. If you're a AAA publisher game, Last thing you want is your users having a bad experience because some NFT drop or something goes crazy or some meme coin goes crazy and you have congestion in the system. You have your own execution environment.
I don't know how off the grid's going to go, but when somebody gets traction in one of these games, what kind of number of users do you think it onboards, and active users? So people who are actually collecting collectibles in games, stuff like that. What are we thinking this is going to do to the space? Because gaming is so vast, right?
So I have two examples. One is another game that's launching on Avalanche. It's a public company called Nexon. It's publicly traded in Japan. It's an Asian company. They have a game called Marble Story. There's about 200 million. It's been around for 10 years. It's a more casual game, so it's not like the graphics of Off the Grid, but it is a well-used and has a lot of longevity, almost 200 million registered users. They have 500,000 to 1 million in terms of monthly active users, depending on what's happening. They are going to launch a blockchain-enabled version of it in parallel with their existing game. So that will be the first test case of how many people start migrating to do. They're doing it for two purposes, not just for user better self-sovereign data and feeling like you own your assets on the user perspective, but some of the highest margins for a lot of these games is UGC, user-generated content. So the composability of tools on an open permissionless network allows their users, their players, to actually become developers and create new modules or new assets, and that's actually free content. So some of the best gaming companies out there with the highest margins, it's because they have users who create content. And that will be an example of a large existing base of Web2 gaming that will be migrating, and that'll be a specific example. Now, I have some numbers of other things that are actually happening. It's not as big as that, and they're slightly in a different space, like in royalty. We can talk about now or later.
Before we go on to royalty, and real world assets and stuff, just want a side question. I'm seeing a lot of interest from Japanese corporates. We've just seen Sony announcing its own layer 2. You're obviously doing stuff with Japanese corporates. I'm seeing it everywhere. What is happening in Japan that's suddenly kind of switched on the light bulb for the Japanese corporate players? I understand a lot of gaming comes out of Japan as well, but what is going on there? Are you seeing the same?
And rest of Asia too. Korea,
yes, Korea as well.
Clear. So I think what's going on is we always have the perspective of a U.S. person, and the regulatory environment here has gotten harder, whereas the clarity has happened elsewhere in the world. So I think what you're seeing is Japanese corporates, Korean corporates, and other places in the world don't have as much uncertainty of what they think a stablecoin will be or not be going forward, and what's considered a security or not a security going forward. And they're willing to now take the steps in terms of developing technology for that when that clarity becomes imminent. In the U.S., frankly, I think it's still more uncertain and the rules are still more vague. So it's almost like looking at it in reverse. It's like they're doing it on schedule. Unfortunately, we in the U.S. are off schedule a little bit.
So, okay, let's move on to royalty. There's another thing that I've been very interested in, whether it's the creator economy, the fan economy. There's so many areas of this. What are you seeing happening there?
So I love the space because, again, it's real world use cases. So we're working with SK. SK is a large conglomerate in Korea. Keep on the Asian theme here. They have a pooled loyalty system. There's 24 million South Koreans in this system, 40% of the country, and over 100,000 merchants that share points. So it's pooled in the sense that if you buy effectively 10 cups of Starbucks, you can get one room at a Marriott. So everything is working.
So it's kind of an interoperable loyalty program.
Interoperable already. But when you have that many participants and you need value to be transferred in call it a token version, especially that's a point or a rewards point, there's no better backend solution than a blockchain. And what they found already is, again, they have 24 million. So far, I think it's like a few 100,000 that have migrated to the blockchain-enabled solution. But because of the gamification of it, because of the feeling of ownership of the actual coins, and because of the trading potential capability of the coins, the engagement and the frequency of use of the, call it, couple 100,000 that are using the blockchain-enabled solution is 30 to 40% better than the average loyalty rewards program in the Web 2 version. So early signs are very positive for a blockchain-enabled solution. In the US, there's actually one that we just announced with a company called TYB, Try Your Best. Now, what Try Your Best is a US version. The founders have great relationships with certain brands like Glossier, Rare Beauty, Urban Outfitters. So they have those relationships on one end. On the other end, they're plugged into Shopify. So they've abstracted away the blockchain component of it to the end user. But basically what they're doing is they're using promotions that would exist anyway at the merchant level and then tokenizing them, but the user doesn't know it. User thinks it's just a promotion code for a challenge. So if you buy a lipstick from Glossier or something, you are given a challenge. And if you tweet or do something with it and become effectively an influencer for them, or you do something else that they set up as a challenge showing up at an event or something, you get these promotional points. And then at checkout, you actually can redeem it. But so and they have also in the last month, and I think last data I saw was July, they've also increased both the dollar amount used by the blockchain person as opposed to the Web 2 version, and they've also increased the frequency by a lot as well. I think their numbers are more like 10 to 15% increase in dollar amount and like 30% more frequency.
You want to unfuck your shit? This is live.
Yeah, that's being recorded. Hey, listen, if you want to unfuck your future, then come and join us in the Real Vision community. Incredible platform, amazing content, some of the smartest people in the world, and amazing tools. And guess what? It'll cost you nothing. Come to realvision.com. I'll see you there, and let's help you unfuck your future.
Do you think, just out of interest, do you think the Asian market is quicker to adopt technology? I mean, it's very stark when you go to Asia how far advanced their cities and technological infrastructure is versus the US. I mean, the US thinks it's a technological, technology-based culture, but it is at building companies, but it's not at using it.
That's exactly right. I think US, we have great developers and coming up with great vision and building things. But in terms of the individual user adopting a digital solution, that has historically been far higher in all the Asian countries, whether it's Japan or Korea, China. And I think there's a couple of reasons, though, especially in Japan, it's obvious. It's the density of things. So people are used to doing things online and in a small place. But I also think that they have a very mobile first type culture, and that also helps out a lot. But yes, they are far more from a user perspective willing to adopt these things. And I can tell you that they are willing to try new things that perhaps the average US person wouldn't.
And it also leads me to think that the UX UA breakthroughs might actually come out of Asia, you know, as a lot of these apps have in other spheres, because they're so consumer focused with their technology, while the US is kind of builds businesses. And as you talked about, the terrible UX UI that is the blockchain space right now, it feels that Asia's going to solve it first.
Looking at products from our partners in Asia versus that of the US, that is factual. The UI, UX, and some of these things with SK, potential ones with Nexon and other companies are working with in Asia, the user and the UI, UX is very smooth. And also, it's also fitted for local taste, if you will. And I saw this as an investor, like, you know, especially if you go to places like Asia and China, meaning Asia, you saw that their search engines were cluttered like Yahoo in the old days. Whereas here, our tastes are Google, plain simple and nothing on it, and simplify the whole thing. But yet they like that scrolling digital things moving, like you're at a 1990s stock trading, you know, place where digital lights, or it's like, you know, living in Times Square or something. So they know their users and they are better at the, call it, user interface level.
How long before we get one of the larger hotel chains or airlines? Because obviously that is the holy grail of the points system, or American Express. You know, there's a few of these big ones out there that feel like it's so obvious that they go on chain, but it takes time.
It will not be in the US first. it will be elsewhere. And there's a couple of reasons. First, I think in the US, most of these loyalty systems are siloed. So the monetary system is controlled by Delta and United Airlines alone. They do have point-to-point partnerships, JVs or whatever, once in a while, but it's not like in Korea where it's a shared pool by everyone. And unfortunately, what the Koreans have learned for the US, unfortunately for the US, is that it's like business clustering. Like this is why we had malls in the US. There's Nordstrom's, who brings in the foot traffic, still appreciates the Taco Bell that's at the end of the mall because people do need to eat, and it does increase overall foot traffic for everyone. And they appreciate, even though they sell footwear, that a Foot Locker is in there as well. Business clustering actually works for everyone. I think in Asia, they're far more comfortable with sharing these loyalty points with everyone else. And the US, they're focused more on the monetary system and effectively devalue it. And in fact, I think there was recent news about Delta getting some heat from the agencies in the US for basically defaming the value of their promotional points for Delta flyers. I mean, I know I've had this problem with not necessarily Delta, but with other airlines, hotels, and places where all of a sudden you think you've earned it, but you didn't earn it. And you show up and it's like, no, you still owe X amount of dollars.
Yeah, I mean, debasement is real. And if you have your own private money supply, which is what they really are, you're always incentivized to debase away your reward system.
That's right. So to answer your question, I think it's going to be overseas. And I can't name names because we're working with some of these, but there will be hotels and foreign adopters of this for loyalty far faster than U.S. airlines or hotels.
So let's talk about real world assets, which is something you focused on as well. What are you seeing there?
Okay, so in the US, we're seeing a little pause. And I would too. And we're seeing a lot of experimentation, proof of concepts, but they are kind of in wait and see mode. What we are seeing a lot of is obviously stablecoin. I was just at, the launching of the New York office with Jeremy Allaire and the growth of stablecoins there. But even everyone at that, launch party is still waiting for a specific clarity as to what determines a stablecoin. We're seeing a lot of tokenization of money market funds, BlackRock, Franklin Templeton, to name a few. That's all happening. But in terms of like tokenizing funds, like we at Avalanche helped KKR a while back, it's really the crypto native funds. Recently, TradFi decided that they wanted to eat their own cooking, so to speak. And they just launched a new fund and they tokenized a sliver of it through our partners at Securitize, who have the right licenses on the Avalanche blockchain, so that individual LPs can go and buy and ultimately trade those LP units, have more price discovery and liquidity. So the bigger funds are on pause, but it's the crypto native guys who are now starting to eat their own cooking, if you will, to show the rest of the world.
How beaten up are you all feeling in the US? Because it is, every conversation I have is like, everyone's hanging their head. It's like, when regulation, everybody's been sued. It's been a terrible environment. I mean, everyone's moving forwards, but it's been bloody hard.
I mean, what we've done is really moved our energy to different areas. You talked about Asia. So, my team has spent a lot of time in Asia this past 3 or 4 months talking to different companies. We've gone to the Middle East, Latin America. So Avalanche's big summit now is going to be in Argentina in October, in a month from now, because 30% of the Argentinians actually use current cryptocurrency as a way to daily transact. So I think looking at everything from a US perspective, yes, it could be kind of frustrating, but what we've done is channel energies the rest of the world that are adopting much faster.
You started the beginning of the conversation talking about the ICO boom in 2017. And ICOs were such an obvious way of coalescing capital really fast, very suitable for a space like this that innovates, dives, thrives very fast. So the time cycles are super fast. Do you ever think we get back to that? Because it feels like everything in this space, you see the experimentation, it grows, it flames out, and then from the ashes rises the phoenix and the next iteration of this. It feels like that ICO stuff is still
business is not finished?
Businesses are not finished in terms of that. You're absolutely right. I think the technology's improved a lot. User interface is not perfect yet, but it's also better. But we also learned from that in the US at least, they were considered, unregistered private security. So you have to have an ATS to be able to match trades. You need to have the right broker-dealer licenses, et cetera, et cetera. So I think the dream of that is still there and it will happen, but it's going to take more time. I think really what's happening is the technology's improved so that, don't forget, right after the ICO boom on Ethereum, you have CryptoKitties that inflated fees because the technology wasn't there. Now it's probably there in at least more than one of these chains, okay? But the regulation is not there yet so that people will adopt it from the issuer perspective. And then at some point, you actually need individuals to have some sort of discovery and research and understanding and get comfortable with the private security asset class. So I can't wait till we get to the point where it's just about education and research and discovery as opposed to waiting for clarity in rules.
Is regulation still not ready for it anyway?
Well, it is happening elsewhere in different forms. A perfect example, before the ETPs in the US got launched, there were ETPs in Europe. So in other places in the world, there are definitely versions of this. But let's be honest, also the largest capital pool in the world is still in the US. And the US, if you use current rules, has the largest accredited and qualified individuals. So that's where the asset value is. And they are the first ones to actually buy this before we get into a true retail situation.
Switching topics, one of the things that, everybody overcomplicates the space or over-financializes the space often. And I step back and think, basically blockchains are in the business of selling block space. That's all we really do in the space. And, yes, unlike other systems like this, whether it's cloud or whether it's the internet, you can actually participate in owning it. So it's very different. But how do you think that how do we start to differentiate block space in the end when everybody's kind of fast and cheap and everything else? How does that work?
That's a great question, because I think there
are... how much room can there be for 50 block space providers? Yes, there's going to be some niche, some broad, but how do you think of block space per se?
So I'll answer that in two ways. One, a block space is not equivalent to block space. What I mean by that is that's like saying a query back in the 90s at Excite or at Lycos or at Yahoo is the same as a query on Google. There are different levels of search, just like there are different types of block space. Block space, there's a lot right now. Think of it as a pure commodity and you're only competing on price. What Avalanche has always believed in is that there's different chains for different reasons and different purposes. So this whole upgrade, largest upgrade of the Avalanche blockchain since the mainnet launch, is about creating customizable, fast, interoperable, what we call L1s, which is your own solvent blockchain, tethered to Avalanche main chain. So you can have your application on your own infrastructure and choose a purposeful blockchain based on what you need, whether it's high transaction throughput, low gas fees, higher gas fees. Some people want actually higher gas fees, or you don't want to deal with it. You want to go to market faster. You use an AVAX as your token instead of launching your own token as some want to do. Or this is why we have a lot of TradFi crossovers, because you can also use a proof of authority private chain that has optionality into the public world, public permissionless world. So the way I think about it is we want to create a network of networks and create the most usable block space with the most customizable block space. So certain chains are going to be good for certain things, but if you want a customizable chain, I think there's no better way for you to develop than on a Avalanche system.
The other interesting thing I've seen is what Coinbase did with Base, which was no token blockchain. And, because everybody thinks a blockchain needs a token, and they're kind of proving it doesn't, just the technology its own way. How do you think through that and what they're doing with Base and all of that?
We've helped TradFi and other companies create no token private chains, not an open permissionless one like Base is. I think it's fascinating what Coinbase is doing with Base. Now, I think Base could be like AWS for Coinbase. They don't really know how to monetize it just yet. They are getting the benefit because there's some arb between settling.
AWS for them. That's really interesting. I hadn't thought about that. Yeah.
But they don't, like, just in the beginning of AWS, they did not know how they were going to monetize that in the very beginning. They were just building a tool for themselves. I think there's no doubt in my mind that Base is a place where a lot of competition will have for general Ethereum. They're already seeing it, the number of transactions, the number of users. Don't forget, they got like 80 to 100 million wallets in the centralized exchange that they can feed into this. But because of the regulation and the clarity of it, that's why they don't have a token. They were just waiting to figure out how this turns into their AWS. They're not sure.
Yeah, I mean, does therefore the value accrue to the share price as opposed to the token? Because there's always been this dichotomy between shares and tokens. You've probably got equity in Ava Labs, and then you've got the token in Avalanche, and this kind of dichotomy has still not been worked out. I wonder if it's going to accrue to the equity or not.
That's right. I think they have to really seriously think about this and how they're going to place it, because the token is for use purposes, for utility. And I think you've talked about it. I've heard you say this at least. Token could be a great way to create value for the brand or culture of a well-known brand, or for other things, not necessarily an ownership in the underlying economics of a business. So I think they need to figure this out. And if they are able to do a token, if they're going to keep it purely as a utility token with great token economics, or somehow does that value also accrue to the equity holder? And in the crypto permissionless world, it's a very tricky construct because it is about community. It is about composability of the tech. It is about having your own data. So in other words, like, all the stakeholders in a crypto ecosystem they're the stake. If you own a crypto token, in some sense, you're using it for gas or token for literally a physical token, like going through the old gates, from a bridge or something in the US, driving a car. You're also, in theory, some sort of, shareholder, but there could be governance and you get to help dictate the rules. There is also, the fact that if you have this, you can also suggest ideas on how to do things. So there's also management, and you're part of being heard in that community as well. So it's like rolling all of these 5 different things into one stakeholder, which is a very hard construct to understand. It's almost like a co-op in a way. And I don't think the world's really figured out how to optimize that yet, but I think we will get there. And that's what Coinbase will have to do with Base if they do have a token. Do they keep this purely utility, purely governance, and separate from the equity? Or do they roll everything up into one thing?
And do they figure out, like AWS, a way of monetizing that accrues to the equity holders? And we kind of start moving the focus of blockchains away from just tokens, and people start embedding them in businesses, which might actually help adoption at scale, because Facebook and Google, none of these guys want tokens because they have so much equity. It's different if you're a startup; you can kind of choose your journey. But for others to do it, I think what Coinbase is doing is a really big deal.
I think it's a huge deal. I think it's worth watching. It's going to have ramifications on the entire space. And by the way, you're talking about large companies. You just mentioned Facebook and Coinbase. They don't have the cold start, go to market problem. One of the benefits of this token is coordination and incentive program. It's your guerrilla marketing and the cold start. And it's an easy way for an entrepreneur, not easy. It's another way for the entrepreneur to go to market faster. Not only from a code perspective, you're sharing and borrowing code from other people, so you don't have to deal with stuff that others would have to go raise VC money to create a product. You're already borrowing the code. So it's kind of like speed to market and go to market things for the smaller enterprise. But for a Coinbase or for a Facebook, if they don't have that edge of a need for a go to market, maybe they do want to keep it as separate. But that's something that's not been figured out by anyone, but it will have ramifications worth keeping an eye on. I do think, though, that what they're doing is very much incredible. And It's funny because when I saw Base become announced, probably over a year ago now, it's all us business people that were saying, wow, could be interesting. But like all the hardcore tech people like, oh, that's just a, L2 and this and that. I'm like, yeah, but they got 80 million people they can throw into this in the the backing of that giant balance sheet and also the whole ecosystem already there. So I think it's very interesting. We'll see what happens. It's worth looking at, especially from Ethereum's perspective.
Now, that's the other question I was actually was next on my mind is how are you thinking through the ETH versus the layer twos? I've got some thoughts that I'm trying to form. I'm starting to think that we're at a scaling point where right now, because the economics of layer twos doesn't really accrue much because it's kind of batched to the layer one, and they've made the layer one so cheap and the layer two so cheap that we're in this kind of no man's of the part of the J curve. But really, maybe if Ethereum truly scales, blockchain's global blockchain use scales massively, what they've built is something that is much more scalable and flexible, and they've taken short-term pain, i.e. price underperformance and less accrual to the chain. But I could be wrong. It could be just it's parasitic and it's terrible and it's the end of... I mean, there's two different schools of thought. What do you think?
Well, I mean, I think you can see it in Vitalik's responses recently. He's definitely turned far more negative on the whole L2 construct. And, although this, what they call blob is only an 18-day data storage, but it's also it's like creeping in on allowing L2s to settle and being the entire blockchain itself. So I think it's hard for the community, and there's a lot of infighting in that community right now, but let's not forget they still are the biggest playground, the largest bar, if you will, where most people are hanging out. So it's still their game to lose. But I do think that what we're seeing now is that dispersion, different chains for different reasons. And there's not going to be 1,000, but there may be 4 or 5, and Ethereum will probably be one of them just because they have such a lead in terms of the ecosystem.
So what are you getting excited about at Avalanche right now, looking forwards, right? We're getting closer to the banana zone. Activity, you'll get business development opportunities, things coming to market, developments of the product. Talk me through what's getting you excited.
First of all, when I heard you say this somewhere or read somewhere, banana zone, I'm like, what the hell is Raoul talking about? What is a banana zone? Is it
everything goes bananas?
He's saying the U.S. is turning into a banana republic? Maybe that's what he's really trying to say. It was not until I went through one of your tweets, basically, and you had the charts, and I said, that's what he means by
it's a banana
zone. That makes sense now. So very creative. You're always forward-looking, very descriptive, and have a framework for everything. So I really appreciate that. I don't always agree with everything you say, but generally I do, and it's very thoughtful and thought-provoking. Anyway, back to so I guess I got lost in there with the excitement of Banana Zone. What was the question?
What's getting you excited as we start getting into the...
Banana Zone got me excited and the way you describe things. But what's exciting me actually is this massive upgrade we have in Avalanche that's coming up, because I see 75 different games that's going to launch in the next year or so. That's over 20 different, call it L1s on the different various Avalanche L1s. I am looking forward to them and seeing how the composability, the connectivity of all of that.
Why did you change the name from subnet to L1?
Because listen, if you have to be a little aware of the customer or the user, if you will, even though Avalanche is an open permissionless thing, but who wants to be called subordinate to something else? And in fact, it's a misnomer because it's your own L1, so it's not subordinate. It is tethered to AVAX because you have to, basically pay fees in AVAX, but it's not different, like it's separate or anything. So it's a network of networks. So that's part of the reason why it was rebranded, so people feel like, and we had that feedback from the community too. There were developers who are like, hey, whether it's an app developer or someone who wanted to fork something and create their own L1s, they didn't want to be known as a subordinate thing or subnet. So That's the reason why we changed it to so people would say, okay, great, now I don't feel so bad about it. And let's see if the merits of the product itself will be worthy of doing it instead of getting over a name or a hump. That's why the name was changed. So I'm very excited about that because I see a lot of, call it L1s in the pipeline in gaming and brands, a lot in overseas. I'm very excited about the overseas activity. And I can't wait to also have clarity in after November, one way or the other. People are going to start running because even if it's raining, they're tired of standing at the start line.
And what is the technological kind of upgrade that happens, and how is it going to affect users or builders onto the space? Talk us through what it is you're doing. When does it happen?
Yeah, it's going to happen in October with a launch of a test net. With basically, think of it's like your iOS upgrade. Everything is going to be better. It's more scalable. And you're going to be able to customize it. You're going to have interoperability with other L1s. Right now, that is not necessarily great in terms of the interoperability with other L1s. And then with that interoperability, not only will your dedicated token, if you choose your own token, you can launch your own token, or you can use an AVAX token. You have interoperability of assets, but you also be tethered back to the C chain, which is the main chain of Avalanche, which is the liquidity hub, and you can ask the composability of the code and borrow things from DeFi and stuff like that. So I think you talk about network effects and Metcalfe's law very well. The way we think of it is more like Reed's law, where communities are now scaling off of each other in a network fashion as opposed to individuals. So I think it's going to be explosive. It's going to be its own banana-like shaped curve when things happen. In fact, Messari has done a decent report in September because it's really hard to measure the transaction count. First of all, units in this space are different for a lot of it's self-reported. I saw this on the internet as well. Not every internet company counted a monthly user the same as some other, depending on hours or days or number of times you go on or whether you actually transact versus just check. In this space, you have the same issues with standardization of the metrics and units. That's why you probably look at trends of the metrics as opposed to just the absolute number. You should look at absolute number.
Yeah, because you just have to assume the trend is correct because everybody miscounts, changes everything, whatever. It's like the 500 million number. It's not the right number, but it doesn't matter. I'm just looking for the growth. Yeah.
Correct. The trends are there as long as that's consistent. So I can't wait to. So what I'm saying is Messari, and I encourage your users to go look up that report on September 12th. They've actually captured a lot of the growth on some of the early subnet, or what we call subnets, now L1s, and capture better understanding of the real trends of the overall network of networks as opposed to just the main network. So I encourage them to check that report out.
How long did it take to do all of this? I mean, this is a big upgrade.
Well, I mean, this upgrade has been in the works for about a year. This has something that we've been talking about it. Community led, the community wanted certain things. So we went back and forth with the community and ultimately came up with the specs and the prioritization of things. And again, this is open and permissionless, so you have to take the community into stride. So it would have been faster probably if it was centralized, but because you had a back and forth feedback, which is what we're all supposed to do in this space, it took a little bit longer. But the technology itself is also going to be, it's not a small feat. A lot of brilliant minds have been at work to do this.
And I think what you're showing here is also another important thing, is that the tech is not static. People kind of think because of Bitcoin that what is launched stays as is, but it's not. We're starting to see relentless upgrade cycles as new competitors come with new ideas, the benchmarks keep moving, the space improves, and you have to keep reinvesting, which is an expensive process as well, but it's going to be what separates the winners from the losers.
Yeah. And it's also, one thing we didn't talk about is trading off short-term and long-term. A lot of the metrics actually capture what's happening in the short term, and those are primarily on-chain stuff. But how do you value or quantify a private proof of authority chain where state of California tokenizes 40 million, cars on chain. That it's a private, so you can't really see it. Doesn't necessarily go into the numbers, but it's there somewhere. How do you do it when we work with Deloitte?
Does that accrue value to AVAX?
Well, I can't talk about specifics in some of these deals, but in general, it will. Yes.
Then it gets measured in the growth of the underlying protocol.
It will get measured in the underlying growth of the protocol. Correct. It depends on the specific deals and differences, but it depends on also the industry. Some industries obviously don't want a token; they want a SaaS model, and Avalanche is actually the software and services team for Avalanche. Avalanche has its own governance, and we go back and forth. There's a service level agreement when Avalanche Foundation wants to do something, we support it, and Ava Labs gets paid for that support and development of the platform or something like that. So it is, Ava Labs gives us the ability to interface with traditional companies in a language, in a scheme, so to speak, meaning like a payment method that they're used to and capable of dealing with.
And are you building other stuff on top as well as part of Ava Labs?
So we never want to compete with the application developers, or in our case, people who launch their L1s or an application on the main chain. But what Ava Labs has done before is, if you see necessary things like infrastructure related, middleware related, to make the developer experience better, or to give the users a better interoperability with other chains or something, then Ava Labs will build that for its for the Avalanche community and for the Avalanche developers.
And what has the upgrade got a name, or is it just an upgrade?
The name is AVAX 9000.
AVAX 9000. And
Yep.
So that goes testnet in October.
Yep.
When do you think it might go live? Obviously, nobody ever knows, but what do you guess?
I couldn't tell you, but
is it 6 months? Is it 3 months?
No, it's probably earlier than that. It'll be like most stuff in this space. Parts of it will go live, and then the hundreds of thousands of TPS Hyper SDK part of Avax 9000 will be a bit later, but the interoperability will come first. The other functionality, like meaning allowing these L1s to spin up their own gas and execution environments, those will come first. So most of it will be done, I would say, by first or second quarter of 2025.
Listen, John, it's a fascinating conversation as ever, but also just really interesting to see what you guys are doing at Ava Labs and the Avalanche ecosystem overall. I love seeing the wins you're getting in areas like gaming and stuff like that, and also the upgrade and the continual improvement of the ecosystem to make it better, and the defining of the product. I think it's just really cool.
Thank you. And it is great. And I think the entire space is actually doing better than some of the metrics suggest.
I agree. From what I see from developer activity, business development activity, everything else is probably ahead of where retail activity and investment activity is right now. And part of that is banana's own catch-up, I guess. Once people have liquidity to invest and regulatory clarity, all the stuff that you and I have just talked about, it feels quite explosive, because it does feel like we're actually going through a step change. You go through most of the big protocols, they're all doing some really big upgrades, and we're starting to see the signs of really big business development stuff, not small stuff anymore. So,
and you've seen it, the adoption of this stuff, whether we go back to the 2017 ICO or CryptoKitties, the fundamental adoption is actually explosive. It goes to nothing to a lot very quickly.
Exactly. Well, always looking forward to it. John, brilliant as ever to speak to you, and I'm sure we'll check in due course, and good luck with the launch.
Thank you, Raoul. It's always a pleasure.
So as ever, fabulous conversation with John. He's been on Real Vision a few times. He's one of my go-to people. I always seek him out when I see him at an event to have a chat with him, because he's super nice, super thoughtful, and he's one of these people who believes in an abundancy mindset. It's like, we should all be working together. Their cross-chain interoperability is interesting. What they're doing with their technology is brave and interesting in kind of rebuilding and relaunching what they can offer and how they're repositioning Avalanche. But really, it's some of these big use cases that they've got going on right now, whether it's the loyalty side or whether it's the gaming side or whether it's the real world asset side, that has me super interested. So I think it's a journey for all of us to follow, whether you're an Avalanche investor or just a crypto investor overall, and you want to see how it goes. So anyway, don't forget, if you are interested in stuff like the Trade Ideas and Notes, you just need to be a Real Vision member. So just sign up. It's free to join. And there, you'll get much more than you get here on YouTube if you're watching it on YouTube. And if you're a Real Vision member, it's really within the Real Vision Plus tier where you get to interact with the Trade Ideas in more depth, and you get to communicate with many members about their ideas. Now, we all want investment ideas. It's what helps us get an edge. And when you've got tens of thousands of people helping you get an edge, it's a very powerful thing. So we'll see you over at realvision.com. Take care. See you next time.
We hope you enjoyed the video. At Real Vision, we help you understand the complex world of finance, business, and the global economy with in-depth analysis from real experts. Join the revolution at realvision.com.